Let's now bring in former Federal Reserve Board Governor Frederic Mishkin. He is also a CNBC contributor. Thank you very much, sir, for joining us this afternoon. I wonder, you've had a few moments now to digest kind of what's happened. We're obviously all looking forward to this press conference. What exactly stood out to you, sir?
Well, I think the issue here is that the Fed is indicating that it has to raise rates. An issue I think that's very important is that they've slowed down the speed of raising rates. I'm not sure how critical that is in one sense, but it's important in another, in that, as Jay Powell has emphasized, the real issue is how high they have to go. I actually would have preferred to actually keep on the 75 basis point cycle for one more time, because I think that actually that they have to go to higher rates than the market's anticipating, and also that the dot plots are indicating as well. So I actually also like to be more preemptive. Again, this has to do with the fact that they dropped preemption, which is a huge mistake. So I think that they have to get back to indicate they really are going to be ahead of the curve, and they're going to be serious about not pivoting. That there are now calls for people to say, gee, the Fed should pause, not too far in the distant future. I think they've got to do their job and indicate that that's what they're going to do to keep inflation under control. And that there is risk that, in fact, they could go too far, but it's worse to have risk that, in fact, inflation doesn't get back under control.
So you would have gone 75 here. That's interesting. I wonder what you make of the more forward-looking market indicators, the deeply inverted yield curves, especially the 10s ones, which has more or less a perfect track record. The fact that they've hiked now the Fed funds rate to well over where the rest of the curve really even is, except for at the very short term. Even something like prices paid of the ISM, right? The way that that's collapsed to levels consistent with 2% PCE inflation. Do those forward-looking indicators of inflation not tell you they're perhaps already too restrictive with policy here?
Well, I certainly don't think they're too restrictive, that's for sure, because what you have to think about is it's not the actual federal funds rate that's important. It's what we call the real federal funds rate, the federal funds rate that's adjusted for inflation. And even now, that's still not very high, because at least for the next couple of years, it's very likely that inflation is going to be not getting down below the 3% level, and that it's going to take a while longer than that. And so right now, they've only gone to sort of moderate tightening. It's not really, in fact, they've just really gotten to neutral just fairly recently. So from that perspective, I think that
but that's using current inflation. In inflation, as you know, is a lagging indicator. I mean, the inflation we're experiencing now is from monetary policy that was set into place 18 months ago.
Absolutely. But in terms of actually the kind of numbers that we see in terms of looking forward to what we think inflation is going to be, we don't really see numbers below 3% for a while. Now, we might get lucky, and in fact, inflation would go below that. But I think expectations are really that inflation is still well above the Fed's target. And from that viewpoint, for quite a period of time, I'd like to see the Fed be a little bit tighter, because they were a little bit too easy earlier on. So this is actually a judgment call. I think really what's more important is that the Fed actually signaled that they're not going to just cave in and start to pause too early. That's what I really, really worry about. So in that case, it's not so much that I worry about the actual rise this time, but just where they're heading to. And that do they actually are willing to actually say that the risks that are more dangerous right now are not getting inflation under control, rather than having the economy go into recession. And that's always a balance. But I think that there are a lot of people saying, gee, we're going to have a recession. Isn't that terrible? But in fact, in order to get inflation under control, that's what the Fed is going to have to do. You could look at past episodes that you always get a slowing in the economy when you're actually trying to get inflation under control. And that's even more true when you've actually gotten a little bit behind the curve, as the Fed has.
All right, so we've got just about maybe a minute or so left here, Frederic. Before we let you go, is there a case to be made? A lot of folks, economists, are talking about this idea that interest rate policy has a long and variable lag. I've heard that term a lot now these days. Is there a case to be made that these days, this decade, that long and variable lag has become shorter, that we see policy impacts in as little as 3 to 6 to 9 months as opposed to 18, like Kelly pointed out before?
I really don't think so. I think that the lags are pretty long. And that's one of the reasons why it's not easy to be a central banker, that you've got to call the shots and sort of call the shots now for what you think is going to happen a year to 2 years from now. So I think that that's the age-old problem that central banks have, which is that they have to try to anticipate the future. It's not easy to do so. You can make some big mistakes that the Fed actually did make in this recent cycle. but that's just the job. It's part of what you have to do. And in fact, this is also an indication that you're operating under uncertainty, that sometimes you have to actually ask which of the balance of risks that you think are much more dangerous. And in this particular episode, not getting inflation under control right now is actually quite dangerous.
Sure.
So that's what I really worry about. And also the political pressures that are going to get much worse on the Fed. There are also people talking about raising the inflation target, which I think is not the right time to do so.
Okay. All right. Perfect. Great thoughts. Frederic Mishkin, former Fed governor, thank you very much. We appreciate it, sir.